Hi, I'm David Stein. In this video, I answer the question, what is a hedge fund? And more importantly, I show you how to invest like one. Stay tuned. So a hedge fund is simply a type of investment vehicle that institutions and high net worth individuals invest in. So just like a mutual fund is a public investment vehicle that you might invest in through an investment manager in stocks and bonds, all a hedge fund is, it's a private mutual fund, or just like a private mutual fund that institutions and high net worth individuals invest in. So hedge funds are neither good nor bad, they're just an investment vehicle. Now, the other unique thing about hedge funds is they're very, very expensive. A hedge fund manager typically charges 1 to 2% of assets under management, plus they get 20% of the profits. No wonder there are multi-billionaire hedge fund managers. Most of them, from my opinion, don't deserve that type of compensation. They're just not that skilled. Yet there are a few, and I spent years going to New York finding those select managers that do deserve that type of compensation because they really do earn their profits. What can we learn from those top tier managers in investing your own investment portfolio? Well, the first thing is hedge funds hate to lose money, and the best hedge fund managers do everything they can to avoid losing money. Why is that? Well, one, it's not real good for their investors if they're losing money. But second, they don't get the incentive fee if they lose money. If there are no profits, they don't get to keep 20% of the profits. Plus, they don't get to start earning an incentive fee until they've recovered the lost profits. So they do everything they can to avoid losing money. But one way they do that is through hedging. They are willing to give a portion of the upside return in order to protect against downside losses. So that you can hedge in a number of different ways. One is by buying some type of insurance contract or derivative, either private or publicly, so you're paying some type of premium, just like when you insure your house against a fire, that's what a hedge fund will do. They'll pay a premium to protect against losses. If you ask them what exactly are they hedging against, the ones that are most frank will say, I don't know. I want to protect against unknown events, to protect against losses. I don't know what might happen, but I want to protect against it. Now there's a second way that hedge fund managers hedge that we can apply to our own investment portfolio. They keep what is called a margin of safety. This is a cash buffer that they will hold just to protect against unexpected losses. I've seen hedge funds adjust that cash buffer to where they'll hold up to 30 to 40% in cash because they didn't have any investment opportunities. Now, it's rare that we would hold that level of cash, yet we should have some type of margin of safety and be willing to adjust our exposure to stocks and increase our level in bonds or cash based on market conditions and based on the investor's age. Investors that are older can't afford to lose money because they don't have as much time to make that money up, so they'll have a higher cash buffer. Those that are younger would have a lower cash buffer. Also, we would adjust that margin of safety based on market conditions. When markets are expensive, when valuations are high, and when investors are feeling very greedy and overzealous, that's when the market is at risk of losing money or falling. And so we would have a higher margin of safety. Conversely, like in early 2009, when markets were very, very cheap and investors were extremely fearful, that's a time to have a lower margin of safety and take on more risk. Now, I show how to invest this way in a free ebook I have. It's called How to Invest Money, and you can get it by clicking the link embedded in the video, howtoinvestmoney.co, or below the video. And if you click it, you'll get the free ebook and have the opportunity to read 10 investment rules that I apply to my own investment portfolio and that you can apply to yours. I hope you get it. I hope you learned a little bit about hedge funds. If you have any questions at all, feel free to contact me. You can also see that contact information just below the email. Thanks.